Hey guys, Lancey here. Hope everyone's doing well. Thanks for joining me. Looking to some more market update. Now, this is obviously something I've done in the past, but nothing magic related. Obviously, it's related in the fact that financing might make a big difference, but nothing directly related to magic. Actually, I might cover Hasbro stocks, but what I wanted to cover was what's been happening in the market for at least the last 6 months. I did the maths. I was gone for about 6 months. So what has happened to the market in the last 6 months? One, two, three, four, five, six. So in the last 6 months, the market has gone down a bit. Yeah, it's back up from its high, lows, but it went down by almost 12. I mean, that's not a correction, but that is a good a correction. It's not a crash. I guess it's a correction, 10%. It's a bit more than 10%. Now, what do I think about all of this? I think the market is very undecisive right now. We've had, and this is for gold, so let me go back to the S&P 500. We've had an almost insane bounce back up to the highs. You can see the line that I drew, the squiggly line, but I'm like, oh, it's going to bounce, bounce, and then if it clears this bounce, it's going to move up. It moved up way further than I expected, and it's still above the moving average for the monthly. For now, it's below the moving average, 9-day moving average for the weekly, and daily it's above the nine count. Sorry, the moving average, and it's also exceeding the oversold, and it's also hit the 200-day moving average for the daily. So the S&P 500, which is the largest stock ETF in the entire world, literally the most amount of money goes into this. Whenever someone doesn't know what they're doing with the money, they put into their S&P 500 as a way to grow it. It's got a very consistent growth of a lot more than 7%, but around about 8 to 9% a year on average. And we've already seen a lot of growth this year. I mean, this year, 2023, started off at 376, I think down here, and now we're at this, which is already 14% and 15% higher. Now, if it stays like that, great. But it tested the 200-day moving average once, and it still looks relatively weak on the RSI, which is the relative strength index. So there is some weakness in the market. It's above the 200-day moving average, but a lot of it's depended, once again, like magic and everything else, based on interest rates. If money has no value, then people will find places to put it. But if money has value in that people had to pay a larger interest for the amount of money they borrow, and the loans are more expensive, and creating debt is harder, and people's borrowing powers are limited, people had to spend more because of inflation, then money, the dollar currency, or whatever you're using, actually becomes harder and harder to keep around, which means it's worth more. And not to mention, it can get you interest. Australia, we have a 5.5% for one bank, 5.65% for another bank. These are some great rates. I haven't seen these for like 8 years or more. And if you can pull that off with the largest amount of money you have, you get back almost a good yield on the rates. You get taxed on them, sure, but it's a sure thing. And you can lock it up in term deposits, bonds, I don't know if it gets taxed on, all that stuff. There's a lot of things you can do with it. So money right now, currency, is gaining value. And that's causing at least some assets that can't be kept up at a high inflated premium to stay high. Now, housing and all that is very tricky because of migration, etc. Lots of things happening there. But even that, at some point, the people are going to get angry, they're going to get annoyed, and they're going to probably do something about it. And normally, what happens is they get rid of the people in power that are causing the issue, and then they blame someone. Now, what are we seeing here? So we are seeing that the S&P 500 is at support for the head and shoulders pattern that it broke. You got a shoulder, you got the head, got another shoulder, and it broke it. Whoop, touched the 200, moved up, survived actually, and it's now hitting its head on the 50-day moving. Is that the 50? Yeah, that's the 100-day. The 100-day moving average. The 50 is the blue. No, the red is the 50. The blue is 20. The orange is 9. It's been a while since I've done this. What else? What else is important? The dollar. So S&P 500, what do I think is happening right now? I think we're going to wait until the Federal Reserve comes up with its next meeting reports, the minutes. Jerome Powell talks in about 2 days, 2 or 3 days, and I think that's a big decisive moment for the S&P 500. If Jerome Powell comes out and sounds dovish and he's like, "Yeah, it looks like inflation's tapering off. We're winning the fight. We're all good. We're going to continue pausing and just see how things are going." That's fine. If he comes out and says, "We will take down inflation to 2% no matter what, no ifs, buts, whatever," the market won't like that. The dollar will go up high. So, dollar, what is the dollar doing? Still shows quite a bit of strength. It's above the 200-day moving average. See that? Bounced right off it, tested it. Great. Continued moving up. Fell below the 9-day moving average, but now it's above it again. So it's waiting on the news from the Federal Reserve. And I bet, I mean, Tesla's weird. It's in a triangle pattern. Which way can it break? I have no idea. There's an earnings report coming up. Earnings and revenue report coming up. It might be okay Wednesday, 18th of October. That might decide on how this breaks. If it breaks down, there's a chance it could reverse back up and flip around. If it breaks up, there's a chance it could hover around there, fall down. The earnings report is important, but the market will play for fools for the first couple of days after it, or at least the day after it. So we'll have to see, give it some time. Next, Bitcoin. Once again, quite a bit of strength, but again, you can see it. It's hitting its day on the 200-day moving average. Gained a lot of strength recently. The RSI is moving up, and it's waiting for a bunch of things. I think what it's going to be waiting for, it could be waiting for these two, but I don't think so. I think it's waiting for the Fed Chair Powell's speech. Until then, I actually don't trust the move that it makes. It could pop up, but until Jerome Powell's spoken, I don't know what it's going to do. US 10-year yield also actually below the 9-day moving average, I think. Anyway, it looks very iffy about it. Once again, interest rates are still moving up very aggressively. On the MACD, it's probably a bit weaker, but they moved up too fast, I think. And they probably will pull back at some point. Australian dollar, very weak. The RBA meeting minutes is tomorrow, and the RBA come out. They have been so weak. It's actually amazing. I don't understand how the public can put up with it. And the Australian public has been distracted by a lot of things recently. But I think the anger is coming out because the RBA is being so weak at putting their foot down and telling the government by increasing interest rates, because the government has to pay back the money that they borrow from the RBA with interest. The government has to put their foot down and stop spending so much money, and they're going to have to boost up GDP. It's a mess. In fact, bringing more people in actually makes the most amount of sense. If I was playing a game like Civilization, yeah, I would want as many people as I can, and I would want the happiness to stay above 0. That's it. I don't care about it being plus 20. I don't want it to be plus 100. I don't want everyone to be living on the moon. I just want them to be more happy than they are sad. And I'll be happy with that, because then it's still... The funny thing is, when I think about a game like Civilization, what's happening around the world makes perfect sense, as sad as it is. Like when you're playing Civilization and you're at the top, you don't care too much about who's coming to your country or anything like that. You pretty much just want your production as high as possible so you can make as many warships as you can, start the war, and then hopefully get over and take as many people out as possible. Outside of that, you want the scientific victory, but then that still requires you to have power. Anything else still requires you to have power. So if you think about it like that, it makes perfect sense what they're doing. Are people happier than they are sad? I don't know. I think at some point that breaks. And that's when you had to put some effort in to bring everyone back, because once that happens, everything goes really bad really fast. And then you stagnate, you fall. So Civilization, great example. Nothing to do, well, I say nothing to do with this, but if you played it, then you'll know it has a good feel on what it is and why people are doing what they're doing at the higher level, where they're playing chess instead of at the low level where they're earning to live for their lives. Oil, very, very important. Oil is the big player right now. With the crisis that's been happening around the world, oil has taken off, tested. Funny enough, it tested, got rejected, bounced off the 9, kept going up, barely tested the 9, and it's been moving up ever since. Very aggressive moves on the daily for oil. But will it keep moving up? I think there's a pretty high chance that we could see oil pretty high up. I mean, US oil has gone up crazy high. And the UK, oh God, if we go back to $124 a barrel for oil, like in the middle of 2022, we're going to be in so much trouble because inflation is going to go back up to probably add an extra 2% over time because it increases the price of all movement. Oil will cost the government and the economies a lot of money. And if they drag this out the right way, we're going to have more inflation, which means higher interest rates. Because as far as I can tell, other than the world reserve banks, yeah, I guess reserve banks, Federal Reserve, being very dovish about increasing in the last 3 to 4 months, which has made people very bullish on buying stuff. There's a pretty high chance that at some point they're going to say, no, it's not going down. We're going to have to bump it up another more. And then wait another month or two, bump it up another more. Wait another 2 months, bump it up more. Because inflation isn't going to go down from here if oil continuously moves up and fakes it for a little bit down and then continues moving up. Oil will cost a lot of money at some point, and I don't know what they're going to do about it. Moving over, I wanted to cover the Canadian. If I find it, Canada, USD Canada. Doing really well. I am quite jealous. I mean, it's easy to tell. The US dollar to Canadian is, yeah, stronger than you'd expect. And I think the reason is because the GDP in Canada has been covered up by the crazy amount of immigration that you guys are having over there. Australia to Canada, yeah, yeah, we're not doing well. The Australian dollars not. It used to like I mean the Australian dollar is meant to be on par with the Canadian dollar as much as it can. It tries. In fact, sometimes we're above it. But in the last couple of months, it's been pretty bad. So yeah, the Canadian dollar is actually not doing too bad overall. Middle of the ground, yep, surprising. It's what it is. Uranium, not something that I'm too impressed with. Massive dip down in the last week. For what reason? Who knows? Hasbro. Hasbro? Hasbro. Has been. Um, okay, so what a crazy turn of events. Now, I will say again, exceedingly oversold. High chance of a bounce. From 55 all the way to 60, very high chance. That is a gain of almost 10%. Very, very high chance. What's going to be the trigger? Most likely the earnings revenue is going to be better than expected, or something else is going to happen. But it's highly oversold now. It's dropped by a large amount. The second Rudy started talking about how good it is, dropped by 25%. Yeah, pretty high chance that it can bounce back by 10% to test the curve. Is it worth it to buy any? It's up to you. I don't think it's mind dipping your toes in at this point. But once again, that's only because it's at the lowest lows. So I wouldn't put any large amount of feelings behind this. It's pretty much to catch a falling knife. If you're happy to catch a falling knife, go for it. It's below a lot of stuff. It's not strong in the slightest, but because it's so weak, it's almost tempting to get it. And don't forget, I said the same thing when it was around about here somewhere, and it would have made at least a decent amount of chunk up as it went up. So that is one. McDonald's, apparently this Ozempic thing is apparently killing fast food and a bunch of other stuff. True, false, not too sure. Very oversold. Most likely will have a bounce. For what reason? I don't know. Maybe it'll come out that Ozempic gives you heart disease or something. I think it's meant to cure heart disease and kidney disease, along with diabetes. Crazy stuff. It's like a miracle drug. Um, DHE, not something that most people would care about. Lumber, eh, doing okay. Nowhere near where it was. Flatlining at 500. Not something I care too much about. US yields are moving up, so US interest rates and Australian interest rates are moving up. Paper. Mm, mm, sorry. Very, very oversold. Yeah, very oversold. Chance of bouncing. Let's find out. Mm, yeah, yeah, there's a chance of bouncing, but it is very oversold, and I feel sorry for anyone who bought up here. Is it gonna bounce? I don't know. I wouldn't, I wouldn't go all out on that kind of stuff. You'd be buying the dip at this point, but I'd actually probably say the sensible way to say this is you're buying the falling knife. If you're buying any of these stocks right now, you're buying the falling knife. The S&P 500 is doing a lot better because of the seven largest cap companies: Google, Microsoft, Apple, Tesla. These companies are holding up the S&P 500. The tech is holding it up, but the tech can only hold it up for so long. And at some point, the interest rates are going to be enough of a reason to get out of a lot of these things because the interest rates are going to be at like maybe 5, 6. I mean, they're already at 5, maybe 6%, maybe 7%. And then at that point, they start canceling out a lot of the gains you can make other places. AUD, China, yeah, that's nothing crazy. Yep, okay. So this one I want to talk about silver. Yep, massive triangle pattern right here. Massive triangle pattern. Going back up, might touch 24.89. I doubt it. It might touch 23, drop back down to 20. Something might send it off to 24. Who knows? It's stuck in this little pattern, and I don't know how it's going to get out of there. Gold, I don't know if I drew myself a triangle for that, but it probably has one. Yeah, it probably has a triangle. Where is it right now? Hitting its head on the 200-day moving average. Very painful. I don't think it's going to look too good. I think Peter Schiff's pretty happy with the bounce that it had in the last couple of days, and I agree. It's a big bounce, but because of the fact that it's below the moving average, it shows a lot of weakness. And it really does depend on what the dollar does. And once again, that depends on what Jerome Powell says. So a bit of a rambling video, but I think I'll call it now. And if you guys have any questions, let me know in the comments. I think I'm just going to mix it up with these kinds of videos for now. I'll maybe put them out at the same, at the speed I'm doing now, or I'll do them, 3 videos per week, but one to cover the magic, one to cover any new information from magic, and one to cover finances. Me trying to come up with set ways to do it never seems to have worked, so I'm just going to try to see what makes sense when I talk about it. Anyways, guys, thanks for watching, and see you guys next time.